Welcome. The focus of this presentation is Sunshine Holdings PLC, one of the biggest Sri Lankan conglomerates, based on their recent annual reports. We will describe the vision mission of Sunshine Holdings, analyze their external and internal environment, review their strategic decisions and implementation, and their financial performance. The strategic orientation of Sunshine is defined by vision and the mission of the company. According to the annual reports of 25-26, the vision of Sunshine is to become the most admired conglomerate in Sri Lanka, and the mission is to grow our enterprise to be industry leaders. The purpose of the company is bringing good things to life, which shows its dedication to products and services enhancing life. In the internal environment, Sunshine focuses on its core values, namely integrity, innovation, perseverance, responsibility, and trust. The Sunshine is a conglomerate with three key verticals, being healthcare, consumer goods, and agribusinesses. Of these, healthcare is the biggest segment. It comprises 56.8% of annual revenue. It comprises of pharmaceutical manufacturing, medical devices, and distribution subsidiary. The consumer vertical consists of food and beverage companies such as Sesta, Vatavalla, and Rankahata Teas, and dainty confectionaries. These are emphasized on Sunshine as some of the most well-known and respected brand names in Sri Lanka. The agribusiness includes palm oil production through Vatavalla Plantations PLC and joint venture between Sunshine and Wilma International, milk product from Lonach Dairy, and spices from recently acquired investment in Joint Agri Products, Ceylon, which is JAPC. By applying the pestle model, we see that Sunshine works in the constantly changing external environment, which greatly impacts strategic decisions made by the country. The political environment is stable for the country after the economic crisis in 2022, as reforms are being conducted in the field of trade and investment, although the public debt is still high. As the economic environment, the country's GDP is growing again. However, the inflation, the currency exchange rates, and price regulations still influence profitability. The most relevant example here is information provided by Sunshine regarding the decrease in pharmaceutical gross margins up to 28.9% because of price controls imported on medicines by the government. Social factors are represented by the aging population, increasing number of chronic diseases, and increased health awareness, driving the demand for healthcare products and services. Technologically, the company is working on introducing the ERP systems, automation, learning, and development. Environmental factors include issues related to climate change, wealthy unpredictability in the business, forcing the company to conduct sustainable activities, for instance, production of biomass energy and wastewater treatment. According to the analysis of Porter's five forces of competition as developed by Michael Porter, Sunshine Holdings function in an industry where competition is extremely intense. This is because there is stiff competition in the market from other conglomerates such as Hemas Holdings, Kaylee's PLC, and CIC Holdings. The threat of the new entrants is not very high, owing to high investment required for entry into industry as well as existing distribution systems. The supplier power of Sunshine Holdings is moderate since the firm relies on both local and international supplies, especially in the pharmaceutical segment. In the same way, the buyer power is moderate owing to the presence of many substitutes by the consumers are loyal to branded products. The threat of the substitutes is relatively low based on the strength of the brand portfolio of Sunshine Holdings. Internally, the resources and capabilities of Sunshine act as foundation of its strategy. Firstly, the brand of Sunshine satisfies all four VRIO criteria. Its established brands, especially in the healthcare and consumer sectors, generate customer loyalty and cannot be easily imitated by competitors. Hence, the brand of the company generate a sustained competitive advantage. Secondly, the distribution network of the company also represents a valuable, rare, difficult to imitate resources and are effectively supported by organization. Thus, the company is able to serve its customers effectively in Sri Lanka and generate another competitive advantage. However, technology represents valuable resources and is effectively supported by the organization. But it is neither rare nor difficult to imitate since the competitors may utilize the same ERP system. As a result, the technology generates only a temporary competitive advantage. Finally, the leadership represents a valuable, relatively rare, and effectively supported resources. However, good leadership can be replicated in long term with talent management. Thus, at the current moment, the leadership of the company generates a competitive advantage. The SWOT analysis assesses the strategic position of Sunshine Holdings through determination of internal strengths, weakness, and external opportunities and threats. The major strengths of the company possesses are the diversified portfolio comprising healthcare, consumer goods, and agribusiness, well-known brands, extensive distribution channels, and good financial stability. These strengthen up the company, helping to create operational flexibility and decrease the company's dependency on each particular business line. Nevertheless, some weaknesses of the company can be identified as well, including its dependency on imported pharmaceutical products, susceptibility to foreign exchange rate changes, and high dependency on Sri Lankan market. Among external factors, there are opportunities like geographical expansion, rising demand for healthcare solutions, and premium products. However, at the same time, the company is faced with such threats as inflation, global economic instability, competitive pressure, and government regulations, especially concerning the pharmaceutical prices. Sunshine uses a differentiated cost structure strategy. First, it promotes its product by quality and reputation. Its annual report mentions how the loved brands and trusted healthcare products enable Sunshine to enjoy premium pricing due to some segments. Within the healthcare market, Sunshine sells its brand based on their full service approach. Local manufacturing ensures dependability, especially the life saving drugs, while having many retail stores makes it distinctive with the regard to services offered. Within the consumer good market, Sunshine consistently refreshes its brands. Innovation is another element of competitive strategy. Sunshine develops and launches new products, R&D, such as organic tea blends and new pharmaceuticals to stay ahead of the competitors. On the other hand, Sunshine keeps costs low to low thanks to its scale of integration. First, as conglomerate, it enjoys economies of scale and integration with its supply chain processes. For example, recently launched Sunshine Wilma joint venture combined the plantation management processes. To conclude, Sunshine combines both differentiation and cost strategies through integration and brand positioning. The corporate strategy of Sunshine for the last 1 year has focused on portfolio evaluation. One of the strategic actions included the buyout of 75% stake of Joint Agri Products Ceylon for 2.7 billion. Joint Agri Products Ceylon, which is known as JAPC, is a spice processing and exporting company, which gives Sunshine an immediate presence in the export of spices into the global premium market. Another strategic actions included reorganization of plantation business segment. Here, the Sunshine bought 40% stake of estate management, which is Pyramid Wilma company, and formed joint venture called Sunshine Wilma, through which Sunshine controls all the operations in palm oil plantation. Earlier, Sunshine had consolidated its farmer segments and had formed a healthcare chain, and then in 2025 further increased its stake in local manufacturing companies, for an example, buying more stake in Health Garden Lena Manufacturing. This shows the strategy is time conscious. The company implements its corporate strategy in a consistent manner by way of good governance and coordination. As per annual report, the board maintained close oversight of financial resilience, strategic execution, risk management, capital allocation, and organizational capabilities during the year. This means that the board and CEO define the strategic objectives and review divisional performance relative to objectives legally. In terms of operational effectiveness, Sunshine makes the best use of synergies between its divisions. Thus, after integration with healthcare division, it conducts manufacturing processes and research and development in a single lab for all the pharmaceutical products, thereby avoiding the duplicity of expenses. Sunshine also leverages technology by adopting enterprise resource planning softwares in the subsidiaries, which continues to unlock efficiencies. This improves supply chain efficiency. Although Sunshine is diversified, it does not lose focus of balancing its portfolio as cash flows from palm oil and dairy segment will help cover any shortfall from the pharma or confectionery. People and organizational structure form the backbone of the strategic success of Sunshine. The company's management compromises of a mixture of continuity and new perspective, where one of the previous CEOs, Mr. Kamal Cabral, is currently the chairman of the company, while as young Mr. Shyam Sattasivam leads the company as the new CEO. The company's board consists of experienced professionals having prior experience in sectors like healthcare, banking, etc. On a cultural side, Sunshine prides itself on behalf of a people-oriented organization, specifically mentions culture as competitive advantage for the group. Values like integrity and innovation are cultivated within the organization. As per the report, the group plans to create a work environment that fosters accountability, collaboration, learning, and innovation. On a structural side, the group is divided into verticals. Each vertical has some degree of autonomy in operations and has its own CEO, but operates under one group wide strategy and policies. This slide shows the financial performance of the Sunshine Holdings PLC over the last 5 years, focusing on growth, profitability, and financial stability. From the revenue graph, we can see that the group has performed well, recording high level of growth in its operations, with the revenues rising from about 24.3 billion in 2021 to 65.9 billion in 2025. From the profitability chart, it is evident that there has been an improvement in gross profit and EBIT, which shows efficient cost control and operations. But the profit after tax has fallen by 2.5% in 2025, mainly because of the control of pharmaceutical prices. The drop in profit is not because of poor performance, but regulatory measures affecting the profitability. Lastly, from the financial indicators, the company's financial stability is evident with the current ratio of 1.73 times, gearing ratio of only 26.8, and ROE of 15.2%. The strategic plan of Sunshine is quite clear. According to the chairman and CEO, the company will reinforce the leadership in healthcare. This implies that Sunshine will keep expanding its domestic pharma network despite the associated costs and regulatory changes. In consumer segment, Sunshine will work on defending and increasing its legacy brand market share by innovating and marketing its brands, adding high-end tea mixtures and extending its confectionery range. Also, the Sunshine will be working on expanding exports of spices and food products thanks to the recently made JAPC deal. In agro businesses, palm oil will continue being a money generator for Sunshine since the demand for it remains very high. Importantly, Sunshine will be increasing working on embedding sustainability into operations as a reflection of the fact that growth needs to be sustainable. In conclusion, Sunshine Holdings is an excellent example of strategy led company since its vision and mission and businesses are closely aligned. It adjusts its strategy to external environment and plays its strength using integrated healthcare and legacy brand power. Thank you.